Hello, hello. How we doing tonight, guys? It is a long song, but I really do enjoy it, so I wanted to spread it out. Awesome. I am doing great as well. Just had a great trading day. Yesterday was a little bit harder for me. I believe I mentioned that in yesterday's review. Just being a max losing day, pretty much, right? Just full losses because I did not trade the beautiful PM trade. Sorry about that. Still got my supper near my throat. Is that the expression in English? Whatever it is, right? Um, but definitely a lot easier of a day, if I can say it, a day for myself. I mean, we had a lot of things to handle, but from a daily perspective, right? We just continued to hire. We talked about it yesterday. Monday's job was to form a range, and now we interacted with that range. Very clear bullish structure that we're going to go and look. Well, actually, you could justify bearish structure as well. So we'll look into that, but definitely a very good day. Just to get right into it, you might have seen I already have my annotations ready. I'm going to try and start doing that a little more often. I also do notice that in the session ranges indicator, when levels are equal, they are basically not combined. Right? We should, we should. I'm going to add something for that. So if you guys are users of the new indicators, definitely be on the lookout. There's going to be an upgrade coming this weekend for the session ranges. But from what we see, just from initial structure, we opened and expanded higher. Now, for me, this was a clear sign of manipulation, moreover, due to the fact that we had the SMT with previous day's high here, right? We can very clearly see it at this point. So this was a high probability high of day. We took out liquidity, we have manipulation, SMT confirming it. Key time, we're early on in the day in the Asia session, very high probability time. Formed a nice low. I mean, at this point, I closed my chart yesterday night and I was seeing bearishness, right? I was seeing no reason to go higher, pretty much. But once we get to 9:30, we've already done our move lower, right? This is the thing with trading New York that I enjoy so much is that you already have a bunch of things to go off of. And some people might say, well, for me, the trade short during London would have been easier. Then good for you. For myself, I prefer trading during New York because I have more information. And as we can see from that point, we could now understand that this whole range that we formed and traded within was nothing other than accumulation. We can frame this as the daily distribution, daily manipulation lower. We had lower time frame SMT at this case, which in the 15-minute we can notice as candle to candle SMT. Of course, we'll see it better in the 1 minute in a second here. And we had clear objectives higher. We had our London framework. We also had the equal highs. There is SMT in this case because on ES they are equal, so we treat them as mitigated, and NASDAQ they are not. But it doesn't make it any less of a better objective. At this specific time, I would consider this SMT. Later on in the day, this is liquidity as any other, and I can look to target it, right? SMT has a purpose at all times. We also had SMT specifically at our news release that we had at 10 a.m. Let's actually bring this guy here so we can see a vertical line as well, just to help us separate it. But right here, we would start trading. What is the only condition in which we can start trading at 9:30? Right? I feel like recently I've been mentioning it a lot. And you know what? Let's go over it. And this will be the first peer review I will be taking note of in resources as per I'll just do the news context. In case you guys missed it, a few days ago we discussed about how I should start categorizing PA reviews for newcomers, right? So that if they want to learn about breaker blocks, well, here are three of my most recent PA reviews where I discuss breaker blocks in length, right? So this will be the first one. What are our rules for trading before a news, right? And more specifically, if we want to get into details, it is because we will anticipate that the news will be expansion instead of manipulation, right? We always look for manipulation to occur at the time of a news. What is that? What is this time-based manipulation? Well, at the time of a news, you expect a run, an aggressive movement against your draw. So for example, on a day like today, where we have a statistical draw on liquidity like London high, well, we would be expecting a move lower. Now, when can we not expect that? and expect that instead the 10 a.m. news will be used to expand in the same direction as our target. Well, when 9:30 has a clear Judas swing, so on our session open we have a clear Judas swing, so a clear fake move, confirmed. How do we confirm it? What is our one and only thing that we require? SMT. See, right at 9:30, we didn't have anything super interesting. I can't frame this wick as a Judas swing entirely, but we ran a tiny bit higher, formed structure, then retraced lower. From the point that this SMT is there, you can start trading. I personally started trading right then and there. Was not scared of the 10 a.m. news because, as I said, we have everything we need. We need a time-based manipulation confirmed with SMT, and then we will anticipate that our high-impact news driver will be used as expansion, which in this case, we still had a pretty sizable retracement. How big was that? 44 handles, nothing crazy in this day and age, right? And then we had a nice expansion higher, short-term SMT to start a retracement. I'm going to leave that here just so we can discuss it. But the important part was that right at the open, right here at 9:30, you would be looking for a long. So let me bring this back. I don't want this vertical line on my chart at all times. Let's just bring it back to just the opening price at 9:30. What do you need other than that? So now you have your framework, right, which is looking to target London highs. What else are you looking for? Well, I need a breaker block, I need a unicorn, and I have my confirmation here that I can start trading. Okay, well, breaker block here, unicorn with the inversion fair value gap. Now you might say, why choose one so low, so far away from the breaker below? Well, we don't have another entry. That's the truth. The moment where you can start trading is when we have this SMT, right? So if we want to be very precise, it happened at 9. No, that is not the SMT I'm referring. We had SMT at this low, so you can trust that low. But it is right here, and I'm going to note it on ES so that we can see a little bit better. It is this SMT right here, and it occurred specifically at 9:38. So this SMT is true as soon as we trade below this low. So starting from 9:38, you can look to enter the trade, and it's funny because exactly then is your entry, right? Exactly when we take out this low, we trade back down into our opportunity. Anyways, we didn't have any other entry opportunities. We could consider this, and even if you went there, I mean, your 3PD array stop loss rule is inversion fair value gap, order block. I mean, this SMT, but no idea is valid until this SMT is here, right? Because I'm not going to trade before the news, before I have my time-based manipulation, right? I'm going to start calling it that. I used to make fun of that phrase, that term, like it was another one of those gurus inventing a concept, but that's actually what it is. It's time-based manipulation, and it's easier to say that than to say a Judas swing confirmed with SMT every single time. And time-based manipulation sounds better. So make fun of me as much as you guys want, but I'm going to start calling it that now. But truly, a very beautiful entry. Right here, it would have been specifically at 9:38. And using your 3PD arrays to look for a nice stop loss, right? You have an order block here, you have another order block here, and you have your entry PD array. So your stop is actually right at this low. Very tight stop loss in this case, which would allow, as you can see, for a lot of return on this move. It was a pretty great day. I personally did not hold past this level. I really do regret it. I believe I was talking with you guys a while back about how the biggest thing that statistics have done for me is being able to hold trades longer. But today I kind of pussied out after yesterday. So yesterday I had a harder day, max loss. Now it was up almost 5R realized at this point after my take profit. So I just fully closed my trade, was happy with those results. And most importantly, I could take this off before the news, so I was quite happy with doing so. And I mean, I missed out on some potential profit, that is for sure, on a lot of potential profit, right? Almost an additional 6R probably, even more than that. I mean, there's no good excuse here. I should have been using part of this trade, right? And partial before, then you go break even. I'm not scared of this consolidation because I'm break even and paid. But I did not today. I went super conservative, and in this case, I believe it was a mistake. So you're using the IFVG as the unicorn fair value gap entry. A unicorn is not necessarily a fair value gap. It can be an inversion fair value gap. At least in my book, right? I don't know what others say. To be honest with you guys, I don't even know what ICT says now. I don't follow that stuff anymore. For me, it's a fair value gap or an inversion fair value gap, which in my book is the same inefficiency in a different state. Like, I don't regard them as any different. It's just, is it going to be bearish or bullish? Right? So this is a bullish inefficiency when we close above. And yes, that is the unicorn entry. It is right here. As soon as we get this SMT, we have our signal that we can enter. Now, I do understand that not everyone can be so quick on the trigger. So wait, let's discuss targets before we actually look at the following. But we're also going to look at other possible long entries because, I mean, I saw a bunch of you guys in futures chat this morning discussing it. So I want to be precise with this. Now, what is this line? What is this drawing? I have absolutely no clue. Oh, yes, it is because of the inversion fair value gap. See, I still have my drawings from trading this morning, so I can sometimes get confused here. But it was this inversion fair value gap to push price higher, but it did not offer an entry. So let's remove this. What I really want to focus on for this long is going to be the range I'm going to be reversing. So we'll go to a 5-minute chart, as we always do. And in this case, you could have referred to the full daily range because, as I said, you have the statistical framework of London high, you have Asia high, you have those relative equal highs, which are equal highs on ES, right? So very, very clear targets and objectives in this case. So you could have used a full range and seen quite easily that your partial would be here, right? And I refer to it on a 15-minute chart because when I have a long range, I like to use the 15-minute. And as you can see, that is your first premium and efficiency. That should have been your partial objective. For me, as I basically told you guys a second ago, I mean, I was already up quite a bit in this sense. So what do I like to do in this case? Well, I'll also use the smaller range. So I like to have this level in my chart still because it is a level of importance. If we are going to reverse from an intraday perspective, we should do it here. And see, we did not. So in my book, I can trust that we did not, but we still had a pullback in this case. And we had no pullbacks until this level. You guys know, right? First premium and forced discount inefficiencies are just, they're cheat code. They make understanding your charts super easy. But what I wanted to say is I would use this range. Why? Because it offers enough risk to reward. And in this case, your first premium inefficiency is actually an inversion fair value gap, right? So this little level right here. So we'll actually name it partial 5-minute in this case, because that is based on our 5-minute chart. If we go back to our 1 minute, and I'll remove the premium discount, started to get crowded a little bit here. If we look right here, remove that premium discount, we have our 5-minute partial, aligns beautifully with just sweeping this high into this partial. And I mean, you're already up 3.69 R there. I'm very, very happy to take some profits here. Then follow up by taking some profits right here, which is also the highs from the 830 Judah swing. Pretty nice. Not a concept I want to discuss on, but a very interesting thing to look at the liquidity between 7 and 930 to refer to, to refer to at the open. But a very, very clean trade. And of course, you would hold that until current high of day if you weren't a pussy. Okay, I'm sorry for using words like this, but this is how I feel about how I managed my trade this morning. So I'm just going to be honest, right? I should have been holding until then. I should have, of course, taken profits here and here as I did. That was perfect management. But I should have left a contract on, held it on through the day, at least to London highs, which is just my statistical edge. I did not. I went here, so I'm going to leave it here just so it hurts a little bit more. And yeah, the main thing I wanted to focus on actually, which we'll remove this just for a second so we can see, is this following breaker that we formed that was just as good as an entry, just offered less risk to reward pretty much. So if we look, we formed a range, swept the low of that range, even more SMT. That is what led to our entry. But what if I missed this? Well, we formed another breaker block right here. Let me remove the text here so I can just make it a little smaller. But we formed another breaker block right here, which would have led to another beautiful entry, definitely a valid entry. Now, why would this entry be good? And let's just look at it from the inversion fair value gap right here. Once again, another inversion fair value gap entry. You have IFVG. This is not yet a fair value gap, so you can't count it. But you have the order block and the other fair value gap, putting your stop right here. In this case, your partial would not offer enough risk to reward. So you have two options, right? You either don't take this trade or you take it, but when your partial hits, you go break even. See, in this case, you would have gotten stopped out break even and no matter what, pretty much. So either you didn't take the trade or it hit your partial and then you had to go break even. Let's actually, I want to annotate it correctly. So in this case, no matter what, it would have been a break-even trade, I guess is the best way to put it. Truth is, even if you held on, for example, if you had a different partial, of course, you know me, guys, I always like to give you the absolute mechanical options, and I believe that these partials today were the best, for sure. But for example, if you're going to be targeting midnight open, right? So you have the statistical data from this, you know this is high probability to be met before 11:15. You have the confluence from the 4 standard deviations. You're going to be looking at that reversal range with that liquidity. I mean, there are a bunch of areas that I could justify taking profits. So sometimes this trade is a win, sometimes this trade is a loss. Truth is, it should always be a loss because you're just too late on what should have been the trade down here. Now, I do understand that it can be hard sometimes, especially because of how quick you would have had to be in this case to enter on this trade, but that is a valid trade, so it's very hard for me to consider anything else. Of course, another breaker block here, but this entry would be after your partial is met. You're now in the premium of this range. This is no longer an interesting long. I wanted to keep this SMT on your chart, right? Because right after the news, we formed SMT. This is an area where I would look for a pullback. It just makes sense, right? You use time, you say 10 a.m. open, candle open, we could retrace into our current range. Well, in this case, it just didn't give you an entry in this move. But what would be your retracement objective, right? Because whenever I'm going to be looking for retracement, I'm going to do the same thing. Now, this is not an abnormally large range, so I'm going to be using the 5-minute chart. As you can see, right here is my retracement objective, right? And as you can see, we formed SMT at this low. Now, I'm seeing too much red on my chart, so let's just leave it here. Let's put it blue. I think I need to change my colors again. It's ever changing, right? You guys know, if you're traders, always changing the templates, always changing the colors and whatever. Well, at least I am like that. But we did not have a short opportunity. And once we had that SMT, well, our retracement objective has been met. So now you can keep looking for longs in this area. Now, I highlighted this because I saw some people this morning, right, who use the lower time frame breakers. This is a prime example of where I'll hop on my lower time frame chart. I'm not gonna lie to you guys, I was done for the day, right? I wasn't even near my charts actually at that point in time. But it is a prime example of when to use a lower time frame breaker, because if you were looking at this live, you would have seen this candle form a range, but not form a swing point, and then expand lower, and then expand back higher. But if I go on a 30-second chart, not even needing to go lower than this, right? If I go to a 30-second chart here, we can see the symmetry. We formed a range, then we traded lower, then we traded higher. You can even use actually this one, which is a more recent. It's not the first one that I spotted directly, but it is the first one that was formed. And as you can see, you have a beautiful 30-second unicorn. Now, I don't trade 30-second unicorns, but I'll gladly take my lower time frame breaker block, go in my 1-minute chart, and find an entry related to it. And see, in this case, it would have been a worse entry. But still, you had a very valid entry to look for a long here, right? And you might say, oh, well, it's too far from this breaker block. Well, as you guys might remember, I hate doing the back and forth now, but we also had this breaker right here, which is a tiny bit higher. This is in close proximity. Sadly, I'm looking at the 30-second chart now and it looks real good. I wish I would trade those, but they aren't consistent enough for my liking. This is a valid rise model, but truth is, anything after the first long, you guys know, I really hate to review because it's just a worst opportunity. It shouldn't be valid. But in this case, you have this entry, you have the fair value gap below, along with the order block, a nice 3PD array stop loss rule. And I mean, you would have had plenty of opportunity, right? Just to this swing high, which would have been a clear area to partial, right? Because we just got off a retracement. You want to see the expansion, look for partial, 2 to 2.5 of that initial breaker, and then look for London, look for Asia, current high of day, right? These are some clear objectives, and it offers enough risk to reward. And I mean, that would have been a great trade right here. I have nothing wrong to say about this trade. And then you would have been break even and gotten broken even here, right? If you're really looking for London high, well, you would have gotten stopped out right here. But truly, I look at this as a continuation opportunity. And whenever you're taking an entry, for example, I missed the first trade or the first expansion did not give me a setup. Well, when I'm taking the next trade, I'm going to be more conservative because it's a continuation entry. The move has already occurred. Now I'm looking for a continuation of that. I like to say energy, I guess, but it doesn't work well in this case. But definitely a very good trade there. I have nothing bad to say about it, but just an important specification. I'll always use the 1 minute, the 1 minute entry, even if I'm going to be using a 30-second breaker block. Next up, we had a lot of setups. As I said, very happy day today for the Rise model, right? Next up, after this target is met, can you justify taking a short? Well, in this specific case, no. But once London high is met and Asia high is met, and now we have SMT at current high of day, yes, 100%. Once again, I would frame this short as a retracement. I would never frame this short as an expansion, right? Expecting another reversal. So basically, open, manipulation, distribution, super deep retracement, and then continuation. No, that doesn't happen. That doesn't exist, right? So you could justify a nice short retracement. And of course, you have your breaker block. You have your overlapping fair value gap, giving you a beautiful entry right here. Oh, actually, sorry. Overlapping IFVG. There's actually even a volume balance here that I missed. So let's go for the worst possible entry. You guys know me. I like to be pessimistic when we're sharing results, when we're analyzing charts. I just feel like it gives, someone coming to the Rise model sees this and is like, hey, what the fuck? This works super well. And he's like, oh, well, this entry. Well, no, I'm not entering here. That's the truth. I'm entering here if I'm shorting this. Because you can see from the next candle over, I didn't even have time pretty much, right? Because the next candle over retraced here. Now the question is, well, I mean, no, never mind. What am I saying? This would be the valid entry. I'm always trying to be so pessimistic, and I end up confusing myself and seeing a worse entry and being like, oh, well, let's just imagine that you missed the correct entry and took the worst entry. But no, let's be realistic sometimes, right? Always pessimistic, but still to an extent. So you have fair value gap. You have the inversion fair value gap, well, which is not actually yet an inversion fair value gap. So your stop would be all the way up here for those two order blocks. Still offering plenty of risk to reward, as you can see, to the maximum point it ran, of course. But I definitely look to take a partial anywhere in the 2 to 2.5 range. Why? Because it does offer enough risk to reward, right? Right here at that 1.7 mark. And that's just a break even / I got stopped out in profit. You guys know me. My trailing rules are very, very straightforward. I see a range form. I need a bearish range in the case of a short, right? So I have a bearish range here. We expanded past, so we closed below, more importantly, my range. So now I'm going to trail my stop down to the new range, which is now this range. This can sometimes get confusing for people, but that's how I personally trail my stop. So after taking my partial, then I'm just waiting. My stop is not trailed. Well, it's trailed down here. Why is it trailed down here? Well, because we expanded past this range. So now this is my new stop loss. Now we expand past this range. Now this is my new stop loss. Well, actually here as well, we expanded past here. So you could actually trail your stop here. Would have scared you a little bit in this area. But definitely another decent trade nonetheless. Truth is, the actual good trade was a first morning long, but then you had plenty of follow-up opportunities to get in the trade, take your money. I mean, there's nothing really more to add to it. Would I look for a long here? No. I don't trade past 11:30, right? And this is my 11:30 mark. Then, I mean, you could always look for PM continuation, especially since your objectives have not been met, right, to go higher. But there is SMT, so it's a little hard to frame longs when there's already SMT at those highs. But you could definitely look for a long. You guys know me, though. PM session, I need to look for a lunch trade. There is no possibility of a launch trade here because, as you can see, lunch low is still valid. Of course, a lot easier if I just have an indicator to show me. But lunch low is still valid. You could look for short, but truth is, after having long, short, even a short opportunity here, there's no way I'm considering another trade. But you know what? Did any of you guys short up here and we have to discredit your idea, or maybe give credit to your idea? Right? I know for the rise model, I did not look for a short here, but there could be some valuable insight. I mean, I've seen a lot of people actually trade the power hour and look for a last hour retracement, I believe they call it. Not my style at all. As you can see, most often what we'll see is consolidation followed by one small expansion. And what I see when I see this, I get stopped out 5 times, then get a small win. This is just how I think because I'm a greedy trader. So I just make sure that I'm not stuck in positions like these. So I trade 9:30 to 11:30, and I trade the PM, early PM, if there is a lunch raid. Don't even trade 2 PM power of 3 anymore. Just a waste of my time. Do you guys have any questions? I feel like that was quite heavy. We went pretty quickly across multiple different concepts and setups. So I'd be more than happy to answer any questions you guys have. But I mean, small audience tonight, and you guys are all regulars, so I'm guessing there probably isn't too much. Am I right or am I wrong? Always open to answering anything, you guys know. I'm seeing Zval type. I'm going to give you a second if you had a question or something. And if not, we're just going to call it a day. I don't have access to the second charts, but I think you had an entry at 9:36 with the 30-second breaker. Yeah, as I said, even if I have a 30-second breaker, I do not use, well, basically, I don't use 30-second entries. And in this case, right, I can zoom in. There is no structure here that entices me to look for a lower time frame breaker at all. Of course, you can use 30-second breakers, and you can go on the 30-second, and I mean, right at 9:30, look for that and see this breaker and say like, oh, look, there's an entry here. Or yeah, I mean, that would be it, right? At 9:36. 9:36, where is it? No, so, well, yes, the 9:36 30-second breaker. But that doesn't entice me. I have a clear entry here with a 1-minute breaker block and a 1-minute inefficiency. That's what I'm looking for. I can go lower in specific cases where you see here, right? You see there was a retracement. You just can't find a range. So, of course, you could just make it easy on yourself and just use those candles and say, well, there you go. I have a breaker block. But whenever I do these reviews, I go down to 30 seconds and show you guys. Truth is, on my charts, I don't even highlight breaker blocks anymore because I just see it. I draw a line. And in this case, I would have just drawn my unicorn. But if you were to draw something, I mean, just here, draw this. Because I know this is a lower time frame range. I mean, I've been looking at charts for a long time with the eyes of the rise model now. I mean, that's the only model I've been trading for the last year and a half, almost year and 3/4 on these specific indexes, right? Those 2 charts, that's it. And only trading NASDAQ pretty much, barely trade ES. So of course I recognize these things because I just get used to it. But going on 30-second and showcasing that this is indeed a lower time frame breaker, truth is, these types of trades are not the trades you should aspire to take. The trades you should aspire to take are the ones that are easy, straightforward, boom. There you go. Well, I mean, it's hard because you have a lot of moving parts to notice to trade before the news, right? But to be fair, let's say you missed those 2 longs, right? So you didn't notice that you could trade before the news. After the news, you said, oh, there is no 1-minute breaker. I'm not trading this. Okay, well, your first trade of the day is a successful short. And of course, it leads to a smaller entry. You want to make more money? You have to be quick. You have to be able to notice these types of things. Sure, things like that as well. But you don't need it. You just don't. You would have still had a successful trading setup nonetheless. And I mean, I'm being pessimistic here, showcasing 1.7R, because that's just a standard thing to do. But you could have made a lot more on this trade. Well, a lot more. Let's not exaggerate here. But 10 a.m. open is just a clear objective to look for a retracement. I mean, if you guys have right statistics, right, opening range high being rated here, look for retracement to 10 a.m. open. That's a very high probability framework. Very high, I mean above 60%. So, I mean, just, I believe, was it Monday? Was it yesterday? Or was it last week that we saw an opening range trade framework pretty much? That was like exactly that. And my partial was at 10 a.m. I believe it was last week or the week before. See, that is why I need to categorize PA reviews. If not, you guys are probably even more confused than I am. But definitely some very nice trades, some very nice setups, very simple day in my book. If you guys had a harder time, that's part of the game, and I'd be more than happy to answer questions. But for tonight, I've been rambling for long enough, so we're going to call it a night. I'm going to wish you all luck trading tomorrow morning, and we'll see each other tomorrow night for another price action review. You guys have a good one. Talk soon.